Hello and welcome to Rise and Prosper with Lakhani. What an incredible time to be involved in the financial markets. Every year, it seems to get bigger, faster, and more volatile. This year alone, we have seen extraordinary moves across the markets. The Nasdaq has been making new all-time highs. Gold has been smashing record after record and then crashing down heavily. Bitcoin has been moving thousands, sometimes tens of thousands of points in both directions. Opportunities are everywhere. It does not matter if the markets goes up or down. As a trader, I am absolutely loving it. I am enjoying the ride, enjoying the volatility, and yes, occasionally laughing all the way to the bank. But before you think this video is about making money, let me tell you a truth that most trading educators, influencers, and YouTube gurus will never tell you. None of these profits would be possible without losing traders. That may sound harsh, but it is reality. For every buyer, there must be a seller. For every winner, there must be a loser. For every trader celebrating a payout, there is another trader wondering where his account disappeared. Without that transfer of money, there would be no market, no profits, no opportunities, no trading industry. In fact, the entire financial ecosystem depends upon a constant supply of traders willing to make poor decisions. Think about that for a moment. The market does not create money. It transfers money, usually from the impatient to the patient, from the emotional to the disciplined, from the gamblers to the professionals. Now, before some of you get offended and rush to the comments section, relax. This video is not about mocking people. Well, not entirely. There will be a little bit of humor, a little bit of sarcasm, and perhaps a few uncomfortable truths. Because the reality is that 99% of traders will hear this message and continue doing exactly what they did yesterday. They will continue chasing trades, overtrading, revenge trading, moving stop losses, ignoring risk management, and then wondering why their account balance looks like a ski slope. But for the 1%, the serious traders, the traders who genuinely want to improve, the traders who are prepared to look in the mirror and take responsibility, this video could be a wake-up call, an awakening, a turning point. Because sometimes the truth hurts before it heals. So sit back, keep an open mind, and stay with me until the end. Today's lesson is called, Dear Dumb Traders, Thank You for Your Liquidity. And let us begin with a round of applause for the real heroes of the financial markets. No, not the hedge funds. Not the institutions. Not even the so-called smart money. I am talking about the traders who fund the entire ecosystem. The dumb traders. Because without you, there would be no market. You see, every time I buy, someone has to sell. And every time I sell, someone has to buy. And that is the way the markets work, agree? Without buyers and sellers, there will be no market. And let's be honest, it's usually not the guy with a PhD in finance. It's you. The trader who bought resistance because it looked strong, sold support because it felt scary, entered late because bro it's pumping, and exited early because what if it reverses? Thank you. From the bottom of my heart. Let's get one thing straight. Trading is a zero-sum game. For me to win, someone has to lose. And dumb traders show up every single day like, don't worry guys, I got this one. No stop loss. No plan. No edge. Just vibes. They don't treat trading like a business. They treat it like a casino. But here's the funny part. At a casino, at least they know the odds are against them. Retail traders? They think. This time is different. They'll risk 30% of their account on one trade, using 100 times leverage or 500 times the leverage, based on a YouTube thumbnail and a tweet, and then act shocked when the market does what it always does. Take their money. And you know what the market says? Thank you for your liquidity. Dumb traders don't lose because the market is rigged. They lose because they chase They overtrade. They revenge trade. They trade emotions instead of probabilities. They don't ask, is this a low-risk, high-probability trade? They ask, how fast can I double my account? And when they lose, it's never their fault. It is the broker, the algorithm, the institutions, the stop hunt, Mercury in retrograde, anything except their lack of discipline and skill. Meanwhile, smart traders? We wait. We plan. We execute. And when price hits our level, guess who's on the other side of the trade? Yep. A motivated retail trader who just watched a 3-minute TikTok. So once again, thank you. Thank you for buying the top, selling the bottom, providing exit liquidity, funding market efficiency, and keeping my equity curve going up. If trading were a food chain, institutions eat retail traders. Smart retail traders eat dumb retail traders. And dumb retail traders? They eat hope. But hey, someone has to lose. And you've made a career out of it. And finally, the market doesn't need everyone to be smart. It just needs enough people to be dumb. And judging by the charts, business is booming. Now let me turn my attention to prop trading firms. First of all, let me say this clearly. There are many reputable prop trading firms in the industry paying out millions of dollars every year to successful traders. These firms have genuinely changed lives. They have allowed talented traders with limited capital to access large accounts and earn substantial income. However, there are also firms with questionable business practices and poor public reputations. As with any industry, you must do your due diligence before handing over your money. But here is the part most traders do not want to hear. The vast majority of prop firms operate on a model very similar to a casino. The winners are paid from the money generated by the losers. Prop firms understand something that most new traders fail to understand: the overwhelming majority of traders will never become consistently profitable. They know that many traders will fail challenge after challenge, month after month, year after year. They know that after blowing one account, many traders will immediately buy another challenge. Then another. Then another. Some traders collect failed challenge certificates the way children collect football stickers. 1 challenge. 2 challenges. 10 challenges. 20 challenges. The only thing growing faster than their ambition is their credit card bill. Now, before anyone gets offended, let me ask a simple question. If you opened a restaurant and every customer left hungry, would you continue doing the same thing year after year? Of course not. Yet in trading, people can lose for 5 years straight and still refuse to change anything. Same mistakes. Same impulsive entries. Same lack of discipline. Same excuses. Different day. Same disaster. The market is not taking your money because it dislikes you. The market is simply charging tuition fees for lessons you refuse to learn. The uncomfortable truth is that most losing traders are not being defeated by the market. They are being defeated by themselves. By impatience. By greed. By fear. By overconfidence. By the belief that success comes from finding a magical indicator rather than mastering their own behavior. After more than 40 years in the financial markets, I can tell you with complete certainty that profitable trading has very little to do with intelligence. I have seen highly educated people fail spectacularly. I have seen ordinary individuals with average backgrounds become exceptional traders. The difference is rarely knowledge. The difference is discipline. The ability to wait. The ability to do nothing. The ability to follow a plan when every emotion inside you is screaming to do the opposite. As I often say, trading is not a battle against the market. It is a battle against yourself. The chart is merely a mirror reflecting your strengths and weaknesses. That is why I have always focused heavily on psychology, mindset, discipline, and emotional mastery. These principles form the foundation of both of my books, Forex Mastery: A Child's Play and Develop a Winning Attitude, both available on Amazon. And if there is one message I would like you to take away from this video, it is this. Everything I have said today is not an insult to your intelligence. It is an attempt to awaken you, to shake you out of the habits, beliefs, and behaviors that keep you trapped in the 95%. Because the reality is simple. Markets exist because of buyers and sellers, winners and losers, profits and losses. Not everyone can be a winner. In fact, without losing traders, there could be no winning traders. So on behalf of all disciplined traders around the world, let me offer a slightly sarcastic but sincere thank you to the traders who continue to donate money to the markets without a plan. Your contributions have not gone unnoticed. But my hope is that after watching this video, you decide to stop being one of them. Become disciplined. Become patient. Become professional. And join the 5%. Because the day you stop gambling and start treating trading as a business is the day the market begins to see you differently. Thank you for listening. Feel free to like, comment and share this video with fellow traders who you feel will benefit from this video. This is Rise and Prosper with Lakhani, where we explore wealth creation, mindset, health, spirituality, and timeless wisdom for modern life. Until next time, transform your mind, transform your destiny.